Hey everybody, back with another video. Excuse the AWOL period, I've been a little bit under the weather, but today's a very important day because this market is moving and we're doing something for the first time this year. We've also got some new economic data out as well. I've got a bit of a sore throat, so you're going to have to hear my dulcet tones, and maybe some of you will enjoy me being a little bit calmer this video. If you like this type of content, smash up the likes. Do not forget to subscribe. Let's start off by talking about Bitcoin, right? We're sitting here at 88,000, and many people are now thinking, this is good. We're so back, right? I'm seeing it on Twitter, on X. We're so back. Let's go to the moon. We're back. And again, like all my content, I'm here just to give you the reality of where we are. When everybody's body was pumping after the FOMC meeting, what did I say? I said, be careful, watch out, and I shared my reasons for that. I'm going to do the same today, okay? So if you appreciate that, smash up the likes. Do not forget to subscribe. Now, through this period, I'm actively trading altcoins like I have been for over a year now, and I share all my results in the free Telegram group. If you actively want to trade with me, jump into that group below. You can see here's some examples. Traded Solana, took 6.7% on a big cap crypto. You can see the breakout here. I mean, on a smaller cap like Mubarak, we took 15% at our second take profit in just 3 hours. So the time frames vary on some of these trades. Hype, TP1, 6.53% and still going, right? These are the kind of coins I'm trading. I'm using TA, I'm using momentum, I'm using news to trade. And if you guys want to actively learn how to trade from somebody who's actually trading, not just these people who say, oh, look, Bitcoin's going to the moon, here's my 10x leverage trade. No, somebody who's actually monitoring altcoins, finding altcoins, and then sharing it with you. Sometimes I'll hit a stop loss, and you see that, right? I share that with you. This is not a get-rich-quick scheme. If you want to actually learn what it's like to trade, the stresses of it, the pains of it, but making it easy for you guys, because I'm doing all the hard work, jump into Telegram where I'll walk you through that. So the first thing I want to bring to your attention today is what's going on here. 3 days in a row. Now, I don't want to kind of call this out before it's happened. We've still got 6 hours left before this candle closes here on Bitcoin, but this could be the third green day in a row. And you'll be hard found to go find another set, right? No 3 days in a row, there's 2. If we go back here, there's 1, then 2, then 2, then 1. And kind of you're going back to this stretch here. This stretch here leading into the new year, which was the excitement around Trump's inauguration and the hopes that 2025 would bring, when we went from as low as 91,000 up to highs of the 102.5 before giving up a lot on the next candle actually on the Tuesday, on the 7th of January. That was the last time we've had 3 days at least in a row. And in that time, we ended up 1, 2, 3, 4, 5, 6, 7 big candles to the upside. Now, more important than that, at that time, we would have been losing our EMA ribbon, right? If we went back here and replayed that, back to this period here where we were here, you're losing the EMA ribbon. Bears have taken control. We nearly got the daily candle close below the EMA ribbon here, but the bulls managed to hold into it, right? You can see the top, this yellow-colored moving average is crossing over the line beneath it, showing that the ribbon is about to flip it. But then the bull stepped in, right? Then we know what happened. The bull stepped in, recovered the EMA ribbon, and then that stretch was history, right? We didn't get the higher high, which wasn't great, but we needed to come back down into the EMA ribbon, have another flush out, and then we run up to 109. So in that game there, what happened, and of course we know this whole game is based on liquidity and based on leverage being flushed out by the market makers. We came in, recovered the EMA ribbon, came in again, flushed out, and eventually we did get a higher high, resulting in that 109.3 thousand on Bitcoin, when at one point, I mean, on the flush of this liquidation candle here, just kind of less than a week before that, you're going as low as 89,000. That's the crazy nature of even our biggest market cap crypto, that is Bitcoin. Now, the difference here, however, is we are beneath our EMA ribbon. We are in a downtrend. There we were in a steep uptrend. We came in and we managed to hold it to then go on higher. Here, we're beneath our EMA ribbon. We fell, we retested, got rejected, go again, got rejected. We go again, got rejected, and now we're going again. But the good thing is, this has been a nice uptrend, right? If I go down into the lower time frames, you can see this is a decent uptrend, all right? The 4 hourly chart has done some good work here. I can put a line here. I can say, okay, we're trending upwards. We're getting ourselves a little bit of momentum here that we could use to hopefully break to the upside. And the reason we need that, I'm just going to switch back to the daily chart so you can see, this pattern, we need to recover our EMA ribbon. We need to get a daily close above then. If and until then, the bears continue to hold the trend. I think it's really important that we understand that. And I'm going to get onto some of the economic data as well shortly, so make sure you watch to the very end. So, EMA ribbon on the daily chart sits at 89.5. Until we get above that, which isn't going to be easy, until we get a daily candle close above that as well, not just a wick, a daily candle close above that, we've not managed to reclaim the trend. So we're not back, as people on X are liking to say, particularly the crypto guys on Twitter, just tweeting, we are back just to get some impressions. No, we've got work to do. The bulls have work to do. The bears will be nervous as well. The bears won't want to get short squeezed, right? Let me share this liquidation data with you guys so you can see as well. If we jump on over to, let's look at the 6-month chart here on the liquidation chart for Bitcoin, you can see the liquidity is building up above, right? This liquidity here for Bitcoin becomes very, very tempting. You got multi-billions of dollars of liquidity sitting around that 100K mark. Now, forget the 109K further up for now. That's sitting here at all-time high. But particularly that 100K mark, that's where a lot of liquidation started piling up, where people were entering overzealous shorts on the market, right? Shorts, the bears were piling in at that level, sniping from the 100K level and saying, this is going to go down. We're having a bear market. We're going down. So that starts to become appealing for market makers, because market makers don't care. They zap liquidity to the downside. I mean, we went as low here as 80,000 or 79, whatever we touched, and then it will go grab some 100K if that's where it thinks we need to go. It's that volatility you don't want to get wrecked in. Now, medium to longer term, do I feel good about this market? I've shared my views on it. I think we could be having recession fears. I still think some of those exist. I mean, I want to share this latest data with you because it will help put into perspective what I'm feeling. So today we got some new consumer confidence data. Why is this important? I studied economics. I'm not sure if many of you guys studied economics, but the whole economy rests on consumer confidence, right? If people are confident in the economy, guess what they do? They go out there and they purchase. They actually, consume in the economy. And that's a good thing. They'll go buy a car, they'll go on holiday, they'll move into the bigger house or rent a bigger house, they're buying more luxury goods, and they go buy a TV and all this kind of good stuff. And that keeps jobs going, and that keeps the economy going and GDP growing, and that's all great stuff. But when that confidence starts to wane, when it starts to dissipate and markets start to get a little bit nervous about where we could be heading, that's where things start to get painful. So this tends to be the canary in the coal mine that gives us clues around where we're heading. Now, it's interesting because earlier in the week, Jerome Powell even pointed to this. And it's interesting that he said that. I'm going to get into the number shortly. But he did say, guys, be careful with this soft data. It's not as good as the hard data, and they're not always correlated, right? I'm paraphrasing, but that's basically what he's saying. Maybe he had a forward vision of some of this data, but he's saying, guys, people don't always tell the truth. They'll answer in this survey that they're not confident, but then they go buy a car. So, okay, we'll take that with a pinch of salt. That being said, when you look at this data, it's pretty bad. Look at this. The Consumer Confidence Index came in at 92.9 in March, which is a 7.2% 2-point drop from the previous month. The Present Situation Index, which measures how consumers feel about business and labor conditions right now, also fell. And the Expectation Index, which surveys what consumers think will happen in the short term, right? That's the important bit. What they think is going to happen in the short term, because that's what delays their purchases. That's what makes them hoard and keep money in their bank account, put cash under the mattress, get out of their stocks, right? It's what they think is going to happen in that near term, fell to a 12-year low. That's crazy, right? This is not like, oh yeah, forget the data, it's kind of inaccurate. No, 12-year low. So this is something for us to be careful about. I think the mood in the US is changing. I think we can sense that in the crypto world as well. The hype and the excitement is starting to dissipate. People are getting worried about a bear market. People are starting to stable up. People are definitely, the pump fund stuff has all died down now. I'm not hearing much of that FOMOing into meme coins anymore and poop coins. So we're starting to see a flight and a rotation into quality. And I think that's exactly what I would advise. That's exactly what I'm doing with my portfolio. I'm in the market. I have no need to get out of this market right now. I want to be in this market. And I'm ready to buy any dip. If we just get rejected here, right? If the bears just prove too strong, great work bears, and you go for a leg down, well, that's what I was calling for anyway. From 109,000, guys, and you guys can be my witness if you watched all the videos. From 109,000, I was calling for, not because I'm a bear, just because I'm looking at the market structure, right? I was calling for a pullback down to that 72 to 74 region. You guys can go watch my videos. I've kept shouting about it. So even if we come into that level, I don't mind buying the dip there, right? It's okay. I don't mind buying the dip at those levels. In fact, if we come on up to the weekly chart, I'll show you exactly when I start to get worried about this market. Where I start to get worried about this market deeply is if we start to get weekly candle closes, particularly below 74, 72 to 74 range, right? If we start to get weekly candle closes anywhere kind of in this range, I'm a little bit worried. I'm a little bit worried in that range because then we're losing the trend. We've lost the weekly trend. There's no chance of us just wicking and keeping our EMA ribbon and flying back to the upside. Then I start to get worried on a longer term. I'm talking multi-month and maybe even a year or two in terms of the plan of where does Bitcoin want to go? What's happened to our bull market? Until then, this is a pullback into EMA ribbon shown with 3 good weekly candles here to the upside, which is pretty decent as well to have good, grinding out a couple of weeks here. Not crazy bumper weeks considering, we started March with 14% down and then we clawed back 2% and we clawed back another 4% and we clawed back 2%. It's hard work, but it's showing that there is some buy the dip, there is some strength, and ultimately this is a higher low, right? If you take this as a high, this is a higher low. You're retesting this area in this region and you're going back to the upside. Now the question, like I just shared with you, is does it want to come fully? Does it want to really come and test that level fully, not just like this? And is this just 3 weeks of the bears taking a rest before they go again? We have to give the bias to the bears. It's their trend right now, right? Particularly on the daily chart, like I shared with you, they own this trend. Until we change that on the daily EMA ribbon, we don't own the daily trend. So your bias has to be, as a technical analyst, that we're going to go here, right? And if you're prepared for that, you're better prepared off. Of course, as an edge case, we can go and close above the EMA ribbon, but that's easy then, right? Being prepared for the bullish situation is easy because you're going to ride that wave to the upside. What's harder to prepare for is preparing for 72, 74 again, particularly when everybody's saying, oh, we're so back at 88. So I do point out some of that kind of, wary economic data. It's causing a little bit of a problem in this market. You're seeing US 10-year start to climb as well in terms of the yields. You're seeing that, we spoke about the Jerome Powell situation as well. But look, what Trump's doing is going to cause a problem. It's going to be a problem for at least, a quarter or two. But the question is, do you think this administration in Trump will come good eventually? Or do you think he's just going to let the whole of 2025 be a write-off? I don't think so. I think he's going to be judged on how well the economy does. He's going to be judged on how well, as a businessman particularly, stocks do and bond portfolios do and how the market does. And if the market's doing well, we have no reason to believe that crypto isn't ready to do well. And that's the good thing here for crypto. Right now, crypto is not falling because of crypto. There's been many times where Bitcoin has fell because of Bitcoin or something really, to do with Bitcoin. Like, for example, when Tesla was dumping Bitcoin, Elon Musk came out and said, we're not holding Tesla Bitcoin anymore because it's not energy efficient. That's painful for Bitcoin, right? We don't have that right now. We've got people buying Bitcoin left, right, center. You've got companies running after Bitcoin. You've got countries running after Bitcoin. Who would have in their crazy minds thought when we were trading Bitcoin as kids that the US government, the biggest superpower in the world, was going to use Bitcoin as a government reserve and use government money to buy Bitcoin? It's crazy, right? We've got the spot ETFs. Things are actually really, really bullish from the specific use case of Bitcoin. There's no countries banning it like we had China ban it, and then we had India ban it, and then we had all these fears around it being, a way for money laundering for criminals, and then we had all this kind of stuff going on. We got the opposite. The guy's been pardoned, right? You had Ross Ulbricht being pardoned. You've got, we've never had a more favorable setup in terms of the SEC. Gary Gensler's out. You've got, Hester Peirce. You've got all kinds of good things. We've got a crypto czar in David Sachs, right? It's crazy to think where we're at now, but sometimes people get impatient because they're promised this bull cycle, and when this bull cycle doesn't come, they sit there and they get frustrated. Right now, time to keep things simple, right? At some point, Bitcoin's going to move. Bitcoin's the biggest asset class. If you think you're going to make a 1,000, 2 million X on Bitcoin, guys, unless you're holding this for like 20, 30 years and you're going to forget about it, kind of like the MicroStrategy strategy, you're not going to get crazy returns. You're going to get better than everyone else. You're going to get better than stocks. I promised I wasn't going to shout. You're going to get better than stocks. You're going to get better than you're going to get better than all these other asset classes, right? Foreign exchange and bonds and all these other real estate. Bitcoin's going to do well. But if you selectively pick your favorite altcoins, like we've spoken about in many videos, and create a smart portfolio, not of 100 coins, but 5 to 6 killer coins, maybe 10, that you really like, that you've got conviction in, that if Bitcoin dumps and those altcoins fall another 30, 40%, that you're not hesitant at all. You're buying the dip, you're buying the dip, you're buying the dip. You know these are the best coins. You're going to do well. You're going to do well. The bull market will come, the cycle will swing back, and you'll have your exit points at that to ladder out your profits. Hopefully you guys found this video useful. If you like this type of content, smash up the likes. Do not forget to subscribe. Again, if you want to trade with me, I'm trading, guys. I'm not taking days off. I'm trading in this market. If you want to join us, ijazcrypto.com/TG. Just click that link below. Get into the Telegram group. Look at the pinned comment. And in that pinned comment, you're going to see all my trades. See the L's I've taken. See the wins I get. See the consistency. See the patterns. See how I do my risk management. And then join us and trade with us. Skip all the trial and error and trade with somebody who's actually trading the market. Thanks for watching, guys. And I'll see you in the next one.